In early February 2025, the trade relationship between the United States and Canada faced an unprecedented challenge. Rising trade tensions stemmed from President Donald Trump's controversial decision to impose hefty tariffs on Canadian goods, citing concerns over illegal immigration and the growing fentanyl crisis. On February 4, 2025, Trump announced a 25% tariff on all Canadian imports, directly blaming Canada for failing to address border security issues, particularly the influx of fentanyl into the U.S. The tariffs were aimed not only at tackling these border concerns but also at reshaping North American trade dynamics. A 10% tariff was specifically applied to Canadian energy exports, striking a direct blow to Canada's crucial oil and gas industry, which is a significant pillar of its economy. Canada's retaliation and temporary reprieve. In response, Canadian Prime Minister Justin Trudeau swiftly announced retaliatory measures, imposing a 25% duty on $30 billion worth of U.S. goods, set to take effect the same day as Trump's tariffs. He also signaled the possibility of extending these tariffs to an additional $125 billion in U.S. imports, pending a 21-day consultation period. Canada's targeted goods included a wide range of American products such as beer, wine, bourbon, fruits, fruit juices, clothing, sports equipment, and household appliances. However, after a series of intense discussions between the two leaders, both governments agreed to a temporary 30-day delay in implementing the tariffs. As part of this compromise, Canada committed to strengthening its border security measures, including appointing a new fentanyl czar to oversee anti-drug trafficking efforts and collaborating with the U.S. on a joint strike force to combat illicit drug trade. While this delay helped avoid immediate economic fallout, the situation remained uncertain, with mixed reactions from within Canada and warnings from economists about potential long-term consequences. The economic impact in Canada's oil industry shift. The U.S. and Canada share one of the world's most integrated trade relationships, with trade flows worth hundreds of billions of dollars annually. Any disruption could ripple across industries, leading to higher consumer prices, disrupted supply chains, and market instability. One of the hardest-hit sectors would be the Canadian oil industry. As the world's fourth-largest oil producer, Canada exports most of its oil to the U.S. However, with tensions rising, Canadian oil producers began seeking alternative markets, particularly in Asia. The Trans Mountain Pipeline, a major infrastructure project transporting oil from Alberta to the Pacific coast, became central to this shift. After its expansion was completed in May 2024, increasing capacity to 890,000 barrels per day, nearly triple its previous flow, Canada gained a more direct route to Asian markets. Since then, shipments to Asian refiners, particularly in China, Japan, and South Korea, have increased. In late 2024, Chinese refiner Rangang Petrochemical secured multiple cargoes of Canadian crude, reflecting China's growing demand for heavy crude oil. This diversification strategy aims to reduce Canada's dependence on the U.S. market amid uncertain trade relations. Environmental concerns versus economic growth. While Canada's oil industry has been a major economic driver, it has also faced criticism for environmental concerns. The country has set ambitious climate goals, including a nationwide carbon tax, yet continues to invest in fossil fuel projects like the Trans Mountain Pipeline expansion. Environmentalists argue that expanding oil exports contradicts Canada's climate commitments, raising ongoing debates about balancing economic growth with sustainability. This tension between economic priorities and environmental policies remains a key challenge for Canada's future energy strategy. Strengthening trade relations with China. As tensions with the U.S. dominate headlines, Canada has been expanding trade relations with other global players, most notably China. By 2023, China had become Canada's second-largest trading partner, with bilateral trade reaching $25.4 billion. Notably, canola exports to China surged by 75.2% due to increased demand. Other major Canadian exports to China included iron ore, copper, coal, and wood pulp, highlighting Canada's growing role as a raw materials supplier to the Asian giant. However, despite growing trade, Canada continues to run a trade deficit with China, with Chinese imports totaling $100 billion in 2023, a 16% increase from the previous year. This raises concerns about economic dependency and trade imbalances, prompting discussions on how Canada can diversify its export markets while maintaining strong economic ties with major global powers. Political ramifications and the future of U.S. Canada relations. The U.S. tariffs have sparked political challenges for Prime Minister Justin Trudeau, whose approval ratings have been affected by the economic uncertainty. While some see negotiations with the U.S. as a pragmatic step to prevent economic turmoil, others believe Canada should take a stronger stance against U.S. pressure. At the same time, some Canadian political leaders are advocating for reducing trade dependence on the U.S. and strengthening economic ties with other global partners, particularly China. However, this raises concerns in Washington, where U.S. officials view China's increasing influence over Canada as a potential geopolitical threat. The road ahead, negotiations and uncertainty. As of February 2025, the U.S.-Canada trade dispute remains unresolved. Both nations are engaged in ongoing negotiations to reach a long-term resolution before the new tariff deadline. The Trump administration has signaled a willingness to take further aggressive action if Canada does not meet its border security and anti-drug trafficking demands. For Canada, the challenge is navigating these complex economic and diplomatic tensions while maintaining strong ties with both the U.S. and emerging trade partners like China. Internally, Trudeau faces mounting pressure to redefine Canada's trade strategy, balancing economic stability, national interests, and environmental commitments. The outcome of these negotiations will shape not only the future of U.S.-Canada relations but also Canada's long-term position in the global economy. That's all for now. Stay tuned for more updates.